The market is down today. The market is volatile. The market is reacting to the Fed. We hear these phrases every single day, but let's be honest. When you close your eyes and think of the market, what do you see? Do you see a chaotic floor at the New York Stock Exchange? Do you see a green and red candle on a Binance chart? Or maybe just your local grocery stores? Welcome to TradingBits X. This channel is all about decoding the economy from the ground up. No noise, just signal. Most people think a market is a place, a location where you swap cash for stuff. But that's only 10% of the story. The truth? A market is not a place. It's a mechanism. It is a biological-like coordination system that manages billions of human desires every second. It's the most powerful computer ever invented. And it doesn't run on a silicon, it runs on information. In this video, we're going deeper than buying and selling. We're going to look under the hood of the global economy to understand how prices are actually born and why the market knows things that you don't. What is a market? Before we dive into the gears of the machine, I have a good question for you. When you hear the word markets, what's the first things that pop into your brain? Is it stocks, crypto, real estate, or maybe the supermarkets? Drop your answers in the comments right now. I want to see how this community views the world. And if you want to master the language of money, hit the subscribe button and ring the bell. We're building a roadmap to financial literacy, and you don't want to miss the next turn. The market as a protocol. Okay, let's define the word. Forget building. Think of a market as a protocol. A market is any system where people exchange value, be it goods, services, or information. But the magic isn't in the exchange. Is in the coordination. Think about a simple cup of coffee. To get that to your hands, a farmer in Brazil have to grow beans, a shipping company have to move them across the ocean, a designer have to create the paper cup, and a barista have to brew it. None of those people necessarily know each other. They don't even have to like each other. So who coordinates them? Who told the farmer to plant more beans this year? There was no global coffee boss. The market did it. It acts as a mechanism that connects the farmer's supply with the coffee carvers. It's a giant web of incentives. Market exists for everything. There's a market for attention. That's why you're watching this. A market for labor, your job, and even a market for risk, insurance. Think about your own life. What is a market you participate in every day that isn't about money? Maybe a dating app? There's a marriage market. Tell me a hidden market you noted in the comments. The secret language, prices. Now, how does this mechanism actually talk? Through prices. Most people think a price is just what something costs. That's boring. A price is a signal. It's a package of data wrapped in a number. Imagine there's a maps store in Florida that destroy half of the orange crop. Suddenly the prices of orange juice in New York, the prices of orange juice in New York jump up. You don't need to read the news to know oranges are scarce. The price tells you that. High prices equal, hey, this thing is hard to find. Please use less of it or find a way to make more. Low prices equal to, we have plenty. Use as much as you want. This is what economists call price discovery. It's the process where the markets votes on what something is worth. Every time you buy a stock or even a loaf of bread, you're casting your vote. When millions of people vote at once, the price balance is formed. It's the point where the people who wants to sell and the people who wants to buy finally agrees. If you're finding this price as a signal concept mind-blowing, hit that like button. It helps the YouTube algorithm say this signal to more people. Supply, demand, and the invisible hand. Let's get technical for a sec, but keep it simple. Supply and demands are the two tectonic plates of the market. Demand is the I want it side, driven by desire and utility. Supply, it is the I have it side, driven by cost and resources. But when they clash, they create the market price. But here's the kicker. This system is a self-correcting. If the price of X gets too high, two things happen. 1. Consumer buy fewer X. demands drop. 2. Farmers decide to raise more chicken because it's now very profitable, supply rises. Eventually the price comes back down, the market heals itself without a government official having to say a word. This is what Adam Smith called the invisible hand. It's the idea that by following our own interests, we actually ended up serving the need of society. If you want to learn more about supply and demand, I have a video about that at the link above. Do you think the invisible hands always works? Or are some things too important to be left in the markets? Let's start debates in the comments. I'll be jumping into to reply. Efficiency versus chaos, the human element. Now, if markets are so smart, why do they crash? Why do we have bubbles like the 2008 houses crisis or the dot-com bubble? Because markets are made of people, and people are, well, we're a bit of a mess. A perfect market assumes everyone has all the information and acts rationally. But in the real world, we get greedy, FOMO, fear of missing out, we get scares, panic selling, and we get misled, asymmetric information. This is the difference between an efficient market and an ineffective one. In a stock market, information travels at light speed. In the housing market, it takes months to find out what a house is really worth. That's why we need rules and transparency. Market without trust isn't a mechanism, it's a scam. This is why regulation exists, not to stop the market, but to keep the signal clear and the data honest. So let's wrap this up. What is a market? It's a giant decentralized computer that uses prices to coordinate the world resources. It's how we decide what to build, where to work, and what the future is worth. Once you stop seeing prices as a cost and start seeing this as information, the entire world looks different. You stop being an spectator and start being a participant who understands the code. If this video changed the way you look at your wallet or the news, share it with one friend, just one. Let's spread financial logic like a virus. Now that we know how the market mechanism works, we need to look at the tools we use to trade with and in. In the next video, we're going to get into the heavy hitters. We're talking about stocks, bonds, and commodities. Why do companies sell pieces of themselves? Why does the world run on debt? And why do raw materials like oil and gold move the entire planet? You learned the rules of the game, now it's time to meet the player. If you enjoyed this content, please hit that like button and subscribe to TradingBits X. We're changing the world of economics. And remember, money, markets, we're trading the future. See you in the next one.